I actually believe that from the very beginning, and we forget this, that Putin felt that there were many Russian supporters in Ukraine. Major misjudgment. And then he felt that the government would collapse. Major misjudgment. He also felt that this war would be over quickly because he wouldn't want to talk about it as being a real war. He wanted it to be a police action. All these things, Carl, are cutting to the belief, I believe, that Europe, the euro dollar, may be bottoming, which would be incredibly important. And just one anecdotal evidence. I mean, let's say you go to a shoe store in Italy. It's BOGO. It's 2 for 1 for everywhere. And I think that anyone who recognizes what parity means, and you have travel, I have Expedia on tonight, is that Europe is just, the dollar is just way too strong. And, Carl, if the dollar gets weak, that's a very good call versus foreigners. I know we're worried about the Fed. But before we panic about the Fed, like Mr. Lutnick, I think, would have had in the previous segment, they may be winning. I mean, tomorrow, CPI, they may be winning. Why do we presume that it has to go up, up, and up, Carl, when it's entirely possible that the only thing really left is wage and food? I have Costco on tomorrow. They're one of the biggest companies when it comes to food. What if food goes down? What if the wages stall, meaning just we don't get any more increases? Then I think we put in the bottom on a lot of stocks. Too bullish? Yep. Carl, I don't think so.
That's what's going to be a fascinating print tomorrow, Jim. I know Morgan Stanley's looking for a month-on-month decline. Same with B of A. Year-on-year, MSC 7.9. We were doing 9.1 back in June, when month-on-month was up 1.3. And those we forget how dramatic some of those CPI numbers were.
Yeah, but we started to see signs of that prior to Powell's Jackson Hole speech, where there had been a hope that there would be sort of a backing off, and there wasn't, Jim. He's your man. He continues to
he is my man. He remains my man.
He's your man. And then there are those who are worrying about other, did you guys read the story about liquidity in the Treasury market and perhaps concerns there, of course, as well, given the balance sheet is being depleted? I don't know. There's always things to worry about, Jim. Not a concern for you?
Well, look, I don't like the way the 2-year and 3-year are trading. They are either they're the greatest bargains in the world at 3.5, Carl, or they are just so wrong, and we're going to 4.5. I'm not buying the 4.5 theory, and I'll tell you why. Because if he does 0.75 and says, look, we're now going to wait, then what are we going to wait for if you're trying to buy a stock? I mean, maybe the midterm elections, maybe you'll be worried about those. So I am not a believer that we have not seen the lows. I do think certain groups, as I mentioned, semiconductors down 40% for the year, they may have to test the bottom. But, Carl, where are all the negatives? I mean, where are all the corporate negatives? The lead story in the Journal today is how we're worried about earnings. I don't know. Maybe the journalists are worried about earnings. I mean, what is the point of constant negative articles when we had one of the great rallies last week? That rally wasn't a fluke. That rally was based on the idea that maybe things are a little better than we thought. Carl, what is the point of being negative after a gigantic slide? You get negative before the slide, not after.
Yeah. So you agree? I mean, the JPM desk today, a calming market, signs of momentum. Is it a green light to get long, or do you need to wait for some of these, CPI retail sales this week?
I'm actually going to go with that view. I think that if CPI is tame, then we'll actually start worrying about the next number. But there is not a single commodity, I follow, not a single one that isn't substantially off its high. I think we're going to begin to see the idea that there are layoffs, but they're not where we thought. David, they're going to be in tech land. Those layoffs count. Whoever says that the only layoffs that you can have that matter is Ford. How about layoffs among the venture capitalists who have not been able to bring a single company public in ages? David, where does it say that engineer layoffs, computer science layoffs, Stanford layoffs, where does it say they don't matter? I haven't seen that article.
No, but it's happening. I don't quite understand why that's not a negative for the economy.
Well, we don't care. We need the Fed to be able to say, hey, listen, we are peak wage. They already said they're peak commodity.
Right. We know they want to.
It's not like.
No, we know they want to provide some. Right. So, yeah, I'm sorry. It's always a little bit more difficult when we're far away. But we know they want to obviously increase the participation rate, as you pointed out many times, take the pressure off of wages. You think they're going to be successful in doing that?
not only do I think they're going to be successful, but I think what we're going to we're 1 quarter away from major industries having to do some layoffs. Obviously, housing, but the ones I'm key on are out here. I mean, how many people will the Amazons, the Googles, the semiconductor companies? How many people are they going to lay off? And those layoffs count toward jobless. And if jobless goes up to 4, then I think you get one more rate hike after this. And then you talk about rate cuts next year. I'll take that.
Shepard Smith here. Thanks for watching CNBC on YouTube.